Ladies and gentlemen, good day and welcome to Refex Industries Limited Q3 FY2026 earnings conference call. Please note, all participant lines will be in the listen-only mode and this conference is being recorded. We have with us today from the management team, Mr. Anil Jain, Chairman and MD. We will begin the call with opening remarks from the management team and post that we will open the floor for questions. With that, I hand over the call to Mr. Anil Jain, Chairman and MD. Over to you, sir.
Thank you so much. Good evening, everyone, and thank you so much for joining us. It's been a great Q3 for us. Q3 FY26 marked a very strong sequential recovery for Refex, led by a very significant improvement in activity levels across our ash and coal handling business. As site accessibility and ground condition normalized following the extended monsoon impact during the first half of the year. On a quarter-on-quarter basis, revenue increased by 160 crores, rising from INR 123 crores in Q2 to 583 crores in Q3, representing a 38% sequential growth. This improvement was driven primarily by higher ash and coal volumes handled during the quarter. Total income for the quarter stood at rupees 590 crores compared to 431 crores in Q2. While cost of goods sold increased from 79% to 81%, this was largely due to a change in margin mix, with no major operational deviation during the period. Despite this, operating performance improved meaningfully. The operating performance improved meaningfully. Profit before tax increased to rupees 89 crores compared to rupees 71 crores in Q2, reflecting a 24% sequential growth, while profit after tax rose to 67 crores, up 29% quarter on quarter. In order to achieve stronger return profiles by redeploying capital and focus towards core businesses, the management has taken a strategic call to exit power trading and refrigerant gas business. Our mobility business continues to strengthen its operational foundation, with teams actively engaging enterprise clients and working towards calibrated fleet expansion with a clear focus on utilization and unit economics. The demerger of Refex Green Mobility Limited is progressing as per the approved composite scheme, following which the mobility business will operate as a separate entity with enhanced strategic and financial flexibility. The wind business continues to progress steadily, with execution of initial customer orders underway, while internal capabilities are being strengthened to support future scale. The business has already secured a cumulative order of 1,860 crores. Looking ahead, with multiple new ash projects commencing the site activity, stabilizing across regions, we expect operational momentum to continue the coming quarters. There is already an open order of close to about 1,500 crores for the ash and coal handling business that the team is currently executing, while it continues to engage with large power plants to win newer contracts. Refex remains well positioned, supported by a strong order book, disciplined execution, and a prudent capital allocation. We thank all of you for all the support and trust in us. Thank you so much. Over to you, Swapnil.
So may we begin with the question and answer session now?
Yes, we can.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participant tab on your screen. We request participants to restrict to 2 questions and then return to the queue for more questions. To rejoin the queue, you may click raise hand icon again. We will wait for a few minutes until the question queue assembles. We'll take our first question from Ms. Ananya Khanna of Alpha Alternatives. Please go ahead with your question.
Yeah. Hello. First of all, congratulations on a good set of numbers. I wish to understand the timeline of the demerger scheme, how long it's expected to take, and the expected synergies from the same.
On the demerger, I think we currently are waiting for some final NOCs from the lenders. As soon as it comes, the scheme is ready to be filed, and we are trying our best to ensure that this can happen as soon as possible. Once it is demerged, the Refex Mobility will run as a separate entity where it will have more liberty to do its own business, and also it will have its own all the debt, etc., will also move to that entity.
All right, sir.
As for the timeline, Mr. Anil, that it will, we expect that by April end it should get finished.
All right, thank you.
Next question.
Thank you so much. Our next question is coming in from the line of Smith Jain of Flawless Family Office.
Hi.
Please go ahead with your question.
Can you hear me? Hello?
Yes.
Yeah. So I had a couple of questions. One is, I can see that we've started a new subsidiary, Refex Engineering Products Private Limited. What exactly is this for?
Yeah, that is below the that is below the wind. To do that is again for the wind project only. There is
Okay.
no specific. This is all targeting the retail customer in the same wind segment.
Okay, got it. Thank you. The second question was related to the wind energy segment only. Even the larger companies that I know of are currently working on 3.3 and 4.2 megawatt wind turbines, right? And we've come up with 5.2. And what they've said is that the size of 5.2 wind turbines is very difficult to transport. And again, it is also that the wind flow is not the same all across. So 5.2 is not a proven technology in India yet. So, like, why exactly are we wanting to be the pioneers and not, work on something which is already proven and is working?
So just to answer the question, Smith, I think first of all, logistics-wise, we don't see any major challenge in moving of these turbines. We have spoken to all the large logistics companies in the country, where we are executing close to about 400 megawatts of order in the next few months. All these logistics companies have confirmed that they can transport and move these equipments from the plant to the sites. Second, yes, just to give you a little little color on the global market. If you take today the average size of the wind turbine globally, it has reached almost 5 megawatts. So various countries, even with low wind speed, are actually moving to 6, 8, 10, 12, 15 megawatt wind turbine sizes. Also, these machines are at a 130-meter hub height, where actually the wind velocity is reasonably better. If you look at a apple-to-apple comparison of a per megawatt kilowatt hour generation between a 2.5 megawatt or a 3.2 megawatt in one location to a 5.3, this will definitely give you more than 3% to 3.5% of additional generation. Second, all our machines contain LiDAR, which actually detects the direction of the wind. So when you see the nacelle and the blades, etc., it actually moves the direction on which the wind is blowing, which is the first time in the country where these blades can move and can identify which direction the wind is blowing, and can turn to that direction so that they get adequate wind to rotate and generate energy. So I think these technologies are definitely proven around the world, and the orders we have got are from the likes of Jindal Steel, Torrent, and KP Green, who are all very large IPP companies and have done their detailed research and understood these products before even placing the orders.
Fair enough. Okay, so what we're saying is we don't see any problem in getting the right of way to transport these machines, and the technology, although it's proven all across, you see that the unit economics would work in India also for the same.
Yes.
Fair enough. Thank you. I'll fall back in the queue. Thanks.
No.
Thank you so much. We'll take our next question from the line of that is from the line of Miten Shah. He is an individual investor. Please go ahead with your question.
Yeah, am I audible?
Yes, please.
Yeah, thank you for giving opportunity. So first question, what I would like to ask is, what is the update on the income tax rate? What we've seen in the disclosure as well as in the media, and any impact regarding the same?
Thank you, Miten, for asking this question. Yes, we had an income tax search on 9th of December in our office premises and in the office premises and the house of the my house and the senior executive. As such, there is no incriminating documents, evidence, or documents or anything seized or taken by income tax department. Uh, we do see that there is a process by which they have an investigation and they will be filing their reports with the central circle where the assessment will be done. We don't see any impact on the company or the business. The company has been having the highest governance as far as business and everything else is concerned. There was a fake news which was in the press, one of the large newspaper carried. We have written to those newspapers and also written to the income tax department about these fake news and to clarify that this news is not officially released by income tax. We had also filed these documents with the SEBI and sometime back as soon as the search got over. Search was ended very peacefully, and we don't see anything impacting the business or long-term growth of the company.
Sure. So you mean to say we have still yet to receive a formal conclusion from the IT department? Am I right?
Yes, generally it
Regarding
takes
the conclusion.
generally it takes 3 to 6 months for them to file the report with Central Circle, and the assessment order generally takes 1 or 2 years to be issued to us.
Sure. So the second question would be like, okay, it is good to see an increase or uptick in the business with respect to previous quarter as they come out from the monsoon period. But however, if we compare our numbers with respect to the same quarter last year, we see a dip in the numbers basically, you know. Is there any specific? What would be the reason for that?
So, Mithun, like we discussed, we have been discontinuing businesses which are very low margin or negative margin, like refrigerant gas business and the power trading business, which actually contributed to close to about 150 to 200 crores last year in the same quarter. And also, if you see, while we were discussing that, most of the focus is going to be on high margin ash moving business, management business, rather than any trading business which we were carrying on earlier. So, as a conscious decision, we have ensured that while the revenues might not grow quarter on quarter to the same as last year, but the profitability will be much larger and bigger and better than last year, even with lower revenues.
Yeah, I can understand the reason for the discontinued operation. I'm even comparing for the ash handling sector, ash and coal handling sector as well. Even segment wise, if you see, it has dipped quite 10 to 15%.
Yeah, that's what I said. There are two reasons. One is obviously during H1 we had an extended monsoon, which actually did give a little bit of delay in starting some of the work. Second, on the coal trading front, also we have reduced the trading to a drastic extent to ensure that this low margin trading business is not contributing to a larger revenue or profitability.
Understand. I have more questions, but I'll join the queue again. Thanks a lot so much.
Welcome.
Thank you so much. Our next question is coming in from the line of Aniket Madhwani of Step Trade Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, please.
Yeah. So my question was regarding the wind revenue. So in last on con call, you guided that wind revenue would start from Q3 or Q4 and will expect to contribute in FY26. So any revenue executed in this quarter from wind?
Last quarter, we did not achieve any revenue, but yes, this quarter as committed, this year end, we will end with substantial revenue from the wind business.
Okay, so can I have a breakup of the revenue in this quarter for
I mean,
Q3?
obviously we don't want to give a leading statement. Most of the contracts which we have to be executed between 9 months to 15 months. So hopefully the first contract, the execution will start in the next few days. It's already in the progress, so it should start in the next few days.
Okay. Yeah. And my second question was regarding the order book. So am I right? You have mentioned 1,500 order book currently outstanding.
For
It's
wind or for
overall.
no
This
ash?
question,
Aggregated.
Yeah, Dinesh, go ahead.
1,500 crore order book is an ash and coal handling segment, and 1,850 crore is there in the wind supply segment.
1,850
to be precise. It is 860.
Sorry, could you please repeat for wind segment?
1,860 crore.
Okay, got it. Okay. Thank you.
Thank you so much. We will take our next question from the line of Vivek Joshi, who is an individual investor. Please go ahead with your question.
Audible?
Yes, please go ahead.
Yeah, I have two questions. One is, what is the status update on the merger plan?
We just updated that to the previous caller that it is in progress, and we are expecting the NCLT order, the merger completion by maybe end of April.
Okay, end of April. And roughly, what will be the division of the assets within this companies? Like, some idea to that.
It is a 100% subsidiary, and Refex Industry doesn't own any assets of the Refex Green Mobility. So it is a 100% subsidiary, and it will be a parallel separate listing completely.
Okay, no, but since it's consolidated, what percentage of the assets sits in this, just to get an idea from the balance sheet? Because right now we just see the consolidated numbers.
220 crore.
Okay, so from the net assets, 220 crores get transferred to mobility, right?
Yes.
Okay, thanks. And could you also update the recent pledging of shares by the promoters? Any particular reason for the same?
No, we have. We have done 3 months back. That is a borrowing at the holding company level.
Okay, thank you so much. All the best.
Thank you.
Thank you. We'll take our next question as a follow-up question from Smith Jain. Please go ahead with your question.
Yes, hi, thanks. This is again regarding the pledge that we've done. With the current fall in the share price, will we have to double down on the existing pledge that we've given? Because I'm sure we'll have to service the difference also, right? Like how much we've borrowed and the collateral that we've given.
Yeah, company has taken a steps, prepaid. You are right. The margin call came, and we have paid from the own source, and we have securitized the lender.
Okay, fair enough. The second thing was in the presentation, I can see that we've given the TAM for the ash handling business to be 68,000 crores. So is that opportunity available per year, or is that the total market size that is available and only a part of it can be realized each year?
Can you tell me? Can you?
Yeah. So the page number?
No. Your question. Can you again repeat the question?
So I was saying that in the presentation, we've given the total available market size for the ash handling business to be 68,000 crores. So I wanted to understand, is that the opportunity available each year, like 68,000 crore is the market size available each year, or is that the total available market size at this point in time and only a certain part of it can be realized by any of the company each year? How does it work?
We have to divide this market opportunity into two segments. One, every year which gets accumulated is what is the generated in the particular financial year. Every year, 340 million of ash get generated.
Correct.
And that is another 10,000 crore market every year. And there is a 55,000 crore of the legacy ash, which is accumulated and available in the pond of the various power plant. So that 55,000 crore of market will every year it will keep. It will reduce and also increase because all the power plant are not able to dispose of 100% of the ash, which is generated every year 340 million metric tons of ash. And it will be a 67,000 crore. You can divide like 10 to 15,000 crore is the market every year is there. Out of 50,000 crore, some will reduce, some will increase, keep on increasing. This market size, to my knowledge, at any point of time, 50,000 crore market will be there for next 10 years.
Got it. Okay. So 15,000 is the incremental value, which is going to increase each year and will be available with companies, to book, and like the 55,000 is the legacy which will keep getting amortized, and like there would be additions to it also as the
Yes.
entire reserve is increasing.
Yes.
Fair enough. Okay. And how do we see this business evolving for us? Like, is this going to be like a strong business area, focus area for us for the next few years? And how do we see us growing in this segment?
Yeah, Government of India, again, I mean, after a few years, again, they are pushing the thermal power plant. 50 gigawatt capacity has been targeted in next 5 to 7 years.
Correct.
And again, everybody, all top CPSUs are setting up, and including few private company like Adani, JSW, they're all setting up the new power plant. And another big opportunity is majority with the power plant where in NCLT, where that is getting resolved, and capacity addition is also happening in the existing power plant, where 10 years back they've done like capacity, they took a permission of 3,600 megawatt, but they have commissioned only 1,800. That 1,800 has never seen the days. Now that 1,800 megawatt, new company, new group which has taken over are adding to the capacity. It will close to 40 to 50 megawatt will get added in, though government target is 5 to 6 years. I see another 10 years this will get added. It may not happen in 5 years, but it will happen in next 10 years. New capacity will get added. That again, that is an additional opportunity for all of us. And coal is going to stay. Coal power plant is going to stay for next 20 to 30 years. Though renewable portfolio also will increase, but coal power, it is not, will get completely removed.
Okay. Thank you so much. Thanks. I'll fall back in the queue.
Thank you so much. We'll take our next question from the line of Gaurav Jain of HNI. Please unmute yourself. Yes, please go ahead with your question. Mr. Jain. It seems we don't have a response from that line. We'll move to our next participant, Mr. Kadaru Sahid of Kadaru Securities. Please go ahead with your question.
Hello.
Yes.
Yes. For Q3 FY26, we have seen the EBITDA margin as 16.1%, and in last quarter as well, we have seen it as 17.42%. So, can we expect this as a sustainable one, or is it a one-off thing? Like in last year, as the same quarter, we have got it as 7.52%.
Yeah, this will continue. This will be anywhere between, as I said in my last quarter call, it will be between 11 to 12%. 12% is a sustainable one. This is due to a lot of realignment. This will be there. Though our target is to do better for year on year, quarter on quarter. But we can safely assume 12%, 11 to 12% will be the number which will keep continuing.
Okay, thanks.
Thank you so much. We have a follow-up question coming in from Ananya Khanna. Please go ahead.
Yeah, so I wish to understand two things. First of all, can you explain to me how exactly your multi-year tie-ups work with the companies that you cater to in the ash handling and coal handling segment? In the sense that what are the what are the terms of the contract? What is the tenure of the contract, and how does it exactly work? Is there some sort of a bidding involved, etc., etc.? Secondly, I want to understand what's your outlook on the mobility segment with respect to, say, the model that you currently follow. Do you expect the demand aggregator and the ride hailing part of the segment to grow by any chance?
I'll answer that, Ananya, on the mobility business. I think we can talk about our business. We are a pure B2B business where we do employee transportation and rent-a-car service. So both these businesses are growing very fast in the country, and we don't see any chance of this the demand reducing because mobility is something which is growing continuously. We don't have any inputs on the ride-hailing apps or the business what is happening around. On the second part, I think Dinesh can take up the question, obviously, and answer that.
Yeah. Ash business completely, ash and coal business completely through a bidding process only. And contract period is anywhere between 5 months to 3 years. The majority of the 1,500 crore of contract will get executed over next 9 months to 12 months. Majority, I mean, it's like 50% will get executed in next 4 to 5 months, 50% in the 12 months, and around 30% of 1,500 crore is over a period of 3 years. We are now tying off for the long-term contract and bidding for the long-term contract, working with many private plant and the government plant to, work on a comprehensive ash management where we take complete O&M of the ash handling plant. We also do certain capex so that we tie off anywhere between 3 to 10 years with the power plant and handle the complete comprehensive ash management, handling the ash, taking care of the O&M of the ash handling plant, and also setting up the taking care of their silos area. So we also depute people there so that we become a solutions provider to this power plants, and we are working towards that 3 to 10 years of the signing for the 3 to 10 years for the contract.
All right, so understood. So you do an end-to-end you provide end-to-end solutions to your customers in the ash handling segment, right?
Yes, that is not as of now we are handling one part of ash handling. Few contract which we have signed is a end-to-end. Our target is all new customer. We are targeting for the end-to-end solutions so that we sign any all contract for a long-term contract like 3 to 10 years contract.
All right, understood. Thank you.
Thank you so much. We have a follow-up question coming in from Aniket Madhwani. Please go ahead with your question now.
Yeah, hi. So I just want to know about the current daily handling capacity. As you mentioned previously that you are ramping up towards 90,000 per day. So I just want to know the current daily handling capacity in coal and ash.
Yeah, capacity is there is no constraint on handling any capacity because it is very we have kept a bench of set up a team where we keep adding it to that bench. And as of now, on a daily basis, we are handling close to 72,000 tons of the ash. And we are ramping up this quarter, we'll cross 90,000. And capacity, we can handle more than 1 lakh tons also. Capacity, there is no constraint because it is only increasing the manpower there, trained manpower there, and also putting additional fleet there. Where we work anyway, fleet, we worked on a hybrid model of own and the attach, that is a hiring model. That challenge is not there in the increasing the capacity.
Got it. And as you mentioned, the wind will be contributing significantly in this quarter, coming quarter. So could you just give an insight? What are you expecting to close in FY26 on an aggregate level?
See, as a policy, we are not doing a leading number, but to tell you, wind will be a crown in the jewel. It is really doing well. We have signed with a top-notch company in India, top IPP player in India. We are well progressing towards we are meeting the timeline, what is committed to all the customers. Delivery is starting from February 15th onward. Part of the delivery will happen in March, within the March. And again, it will keep adding because from now, it is a continuous delivery will happen. Initial period of from the order date till now, engineering happens. There is a lot of other work happens on the ground. A delivery getting started from now. Every month from February onward, we have a delivery schedule. It will contribute significantly to the Refex group. We expect wind business will be a crown in the jewels for the Refex industry.
Got it. And what margins are we expecting in that segment?
Yeah, it will be like other competitor, what they are reporting. Initially, we're setting off. We're working at a very, very competitive price to win the order, but we'll be making a very decent profit in the wind sector.
Okay, yeah. Thank you. That's all.
Thank you so much. We have another follow-up question coming in from the individual investor, Miten Shah. Mr. Shah, please go ahead.
Yeah, thank you for giving opportunity again. So correct me, if we would to see the TAM of the ash and coal handling business, as we also discussed last time, that presently I think we are handling about not even 1% or around 1% of the total TAM basically we are serving. So we not even scratched the surface in that context. How have we grown, in terms of handling this metric per ton in terms of CAGR? And could you please also elaborate on the realization per metric ton? As I see, it is roughly around 400 rupees per metric ton. How has this also panned out over the years? What was it earlier and how is it now? And what do we expect going ahead?
We are growing at 48% CAGR in quantity. And average rate is anywhere between 555 to 700 rupees. And it will keep growing at this speed because market, as you rightly said, TAM is very, very large. It is only tapping, projects are available. We are choosing at what margin we need to do the business. And we are not taking all the projects as it comes. We are very, very particular about the quality of the works and also our margin. We'll keep growing at this speed. Past also, we have grown from 6 million tons to 10 million tons. This year also, it will be like a 50% jump in the quantity. We'll be keep growing because market size is very, very high. It is not about 50% growth. Market is huge, and we are expanding our team and the fleet rapidly into the market and the states. Few of the states, we are again adding our team. Where our presence was not there, we have entered during last quarter. We are entering another new states in this quarter. It will keep growing. The speed of growth will keep continuing from, what is there in the past, it will keep growing in the coming quarters.
Yeah. So I understood, there is no constraint on increasing the capacity as I understood from this con call. But how about the realization? Like you said, 550 to 700. Is there also, do we also see an uptrend in the realization per se?
That is, few of the cases, few of the states realization has gone down due to insane bidding, that are the project we have knowingly left it. But few of the states realization start improving because people who have local player who have taken the order has not executed because it was not viable to execute. And few of the places realizations improves where the distance is long. So that new project we have, whatever the new project we have owned and declared to the stock exchange, disclosed to the stock exchange, all are long distance and better realizations.
Got it. And just one request, we would appreciate, if the con call is conducted, say at least next day post the results, because, we see the presentation and the media release from the company as a disclosure as well as the results, So if you can just give us at least half a day or day, for us to go through it and then, so that we can, at least we are in a good mood to ask some better questions, to the management and to understand more the company. It's a genuine request.
Noted your feedback and we'll keep in mind. It was
thank you.
For us to prepare so much in the same day board meeting, having so much calls.
Yeah, you guys are also very occupied.
Since morning 8:30, we are all preparing for all this. We'll keep in mind. Thanks.
Yeah, thanks. I have more questions, but I'll stand in queue. Thanks a lot.
Thank you so much. We'll take our next question from Vivek Joshi, the individual investor. Please go ahead.
Yeah, my question was, if you take a slightly longer term view, 3-5 years, so do you have some idea of what percentage of your business will be from ash, coal, and green mobility, just to get an idea of how the company is thinking?
No, like green mobility will be demerged, so it will be a separate entity.
Yeah, but
Obviously,
right now
for
it's still
Refex industry
to
in a
understand
standalone basis, Refex Industries will have 100% business, maybe 95% business from ash and coal handling only.
and like 5% from wind, right? That
No, you're talking about consolidated. Consolidated, I mean, obviously, we don't have such a long projections to make over here, but substantial business will be between ash and coal and wind. Mobility will again get demerged, so it will be a separate entity, and there won't be any consolidation.
okay. Thank you so much.
Thank you so much. We'll take our next question from Srijan Kaushik, the individual investor. Mr. Kaushik, please go ahead with your question.
Hello, am I audible?
Yes, please.
Yeah, my question is regarding the recent pledge of equity shares with this Catalyst Trusteeship Limited. So, what's the reasoning behind the same? And moreover, this what is the percentage of shares that are being pledged right now, and are there any plans for the reduction of these pledged shares?
See, this catalyst pledge was related to a borrowing at a holdco level, and there is a plan next over a period of next 6 months. Substantial pledge will get reduced. As of now, close to 25-26% of the promoter holding has been pledged, and this will get substantially reduced over a period. Every month there is a plan. It will get reduced over a period of next 6 months. Substantial reductions will happen.
Okay. Thank you.
Thank you so much. We have a follow-up question coming in from Smith Jain. Mr. Jain, please go ahead.
Yes. Do we have to give any performance guarantees on the wind turbines that we supply, or do we take any execution risk also?
We don't take any executions on our head. It is a pure play supply of wind turbine. Pure play. It is purely we supply. There is a advance bank guarantee to be given for the supply, and that PBG to be given, and that PBG comes back once we supply the turbines. We are not doing any EPC work or installations work for any of the project.
Okay,
India
so
is matured enough now.
given, right?
Can you repeat that?
I was saying that no performance guarantee is also given, right? Like, just to probably understand.
No, on the machines, we have a performance guarantee on the machines performance only, not on the generation of kilowatt hour, etc. We don't give any unit-wise guarantees for generation, because that's all dependent on the wind velocity and the other maintenance, etc. Wherever we are doing the O&M, the machine's performance, any spares, etc., there's a warranty on the machine which we give for 12 months, and beyond that, 5 years, there's a performance of the equipment, uptime of the equipment is what we give them.
So it's like straightforward how it is similar to buying an electronic appliance and
Exactly. Like buying a fridge or refrigerator or something.
Correct. Okay. And is the risk reward justified? Because I'm assuming it is a competitive market. The margins that we're making is, I would say, is fairly low. And if suppose there's any default in the machines working, the payment outflow that would have to be paid would be a certain amount, and would be a higher amount. So is the risk reward justified at this point? Do we see our machines performing well
Definitely, machines will have to perform very well. I mean, that's what we are trying to portray. And as a company, we want to ensure that the quality is at the is the topmost priority for these machines. And on the performance side, definitely, these are all proven machines where the technology is again from a German technology, and globally, close to about 20 gigawatt of these machines from a Chinese manufacturer is operating. So we don't see any major failure. We don't see any failure at all as far as equipment is concerned.
Okay, fair enough. Thank you. Thanks.
Thank you so much. Our next question is coming in from the line of Rahul Bafna, who is a student. Please go ahead with your question. Mr. Bafna, please unmute your microphone. We don't have a response from Mr. Rahul Bafna's line. We'll take Ananya Khanna for a follow-up question. Please go ahead, Ms. Khanna.
Yeah, hi. So you mentioned that you have a license from a German company to manufacture wind turbines in-house, correct? So I want to understand, are you seeking to be, and I mean, you definitely seek to be an OEM for wind turbines, right? But at the moment, are any significant functions with respect to the manufacturing process outsourced, or is everything done in-house end to end?
Generally, manufacturing of wind turbine is very similar to a car or something like that, where all the parts are manufactured by various vendors across the country. And these are all manufactured under our load license. The product development and engineering is done by us. They are all contract manufacturers. So some of the parts, like maybe most of the steel towers, etc., are also third-party manufacturing. So it's more like an assembly center, which all the wind turbine manufacturers have.
All right. So product design and assembly is what happens in-house, right? And the remaining.
Yes.
Okay.
Yes.
Thank you.
Thank you so much. We'll take a follow-up question from Miten Shah. Please go ahead.
Yeah. So, one more request, if in the subsequent presentation, like we've indicated for ash and coal handling business, the current order book stands at 1,500 crores. I would request, if you could also include for the wind energy sector as well, the current order book, say in terms of megawatt, gigawatt, or in terms of revenue. And also, if you can also include, the projected or targeted timeline, for this order book, if that's a fair request.
Yeah, Mitenji, I've already told.
Yeah.
1,000 is there in the PPT also. 1,860 crore is the order book for the wind segment, and it is there in the PPT, one of the slides. And this has to be closed, executed between 3 to 12 months from today. Okay, and that is the wind, and the 1,500 crore. This has to be all order is from 5 months to 3 years. Majority, if I divide that 1,500 crore, 40% has to be executed in next 4 months. Next 4 to 12 months, it has to be executed around 50%, and balance 10 to 15% belongs to the 3 years contract.
Yeah, I did hear this in the previous reply, as you said. Basically, it's just a request, if this can be included in the presentation as well, in an elaborated manner, how this would be executed. That's a request. And second thing, I'm a little bit, enthused about this wind energy business. This wind, is it the name of the subsidiary, or is it the name of the OEM, original OEM from where we are getting the transfer of technology?
No, the name of the original OEM is Vensis Energy. So it's the name of the subsidiary is called Venwind Refex Private Limited. The name Venwind was coined from Ven of the Vensis and Wind to demonstrate what the company is doing. And Refex is the prefix to that.
Perfect. So correct me. Is there any royalty that needs to be paid to the parent company? Is there any contract as such, annually on the order?
Yes, there is a royalty which is to be paid after 3 years, on a year basis, which could range from anywhere between 0.25 to 0.5%, depending on the volume we do.
Correct. And Grim, is there any? I mean, who is handling this vertical? I mean, because as I believe, it is a very complicated vertical, basically on a standalone itself only. Where we see a lot of competition in a country as well. So, is there any dedicated professional or a CEO who with a sound pedigree or a prior experience who is looking after it dedicated?
So, a very professional team with an cumulative experience of more than 150 years is managing this business. Anirudh Khemka is the CEO for the business. He has been in the industry for a very, very long time and are associated with large companies like NEPC, etc. in the past. And the whole team, the top management who are in this is from various wind companies who have served more than 10 to 15 years or even longer and been part of the industry.
Got it. Thanks a lot. As usual, I have more questions, but I'll definitely ask if I get an opportunity.
Mr. Shah, we request you to ask all your set of questions now.
Yeah. Okay.
If you have any.
Yeah, sure. So my next question would be: are there any investment planned for this fiscal? I mean, hardly there is any time, or for the next fiscal or going ahead?
No, there is no. There will be a very, very small capex will happen both at RIL level and small will happen in the win-win level. And there is no any big plan of investment in this quarter.
Correct. And
like some of the investment is lying as a loan in the subsidiary, which may get converted into either OCD or equity, depending on the structure of whatever agreed with the respective SPV, and that will happen in this quarter.
Noted. Okay. So my probably the last question I would presume would be: what is the cash in hand and also the debt as of now we speak?
Not having the number in hand as of now. We have substantial
indicative.
Yeah.
Indicative.
More of upward of 100 crores. We have good amount of cash in hand.
Okay. And what about the cash on the consolidated level? Debt on the consolidated level?
Debt at a consolidated level will be this is 300. It is around 700 crore. Majority of that is non-fund based.
For the working capital.
All is working capital. 150 crore will be the CC limit. 550 crore will be the BG and LC limit.
Okay. So as such, long term is as good as nil. It's only mainly for the working capital. Yeah.
Only small term loan. That is 37 crore of term loan. That is for the office building is there. Other than that, nothing. No term loan.
Perfect. I think that's enough for today. Thanks. I really appreciate for your response, and I wish you all the best.
Thank you so much. Thank you. We'll take our next question from the line of Rahil S. of Sapphire Capital. Please go ahead with your question.
Hello. Good evening. Am I audible?
Yes, please.
Yes. I wanted to clear my confusion about the EBITDA margins outlook you have provided. Is this on a consolidated basis, you've said? So 11 to 12% for quarter 4 and the entire year, and you'd like to do better going ahead quarter on quarter. But then why was our margins on the higher side in the last 2 quarters, and why will they not sustain at those levels, which is mid-teens?
No, it is depending on the contract to contract. We are not telling it will not sustain. There is a multiple contract has a multiple, different type of margin. It is on the execution which happens during that period. that decides the overall margin for that quarter. We always target for a higher margin, and we expect also it will be a better margin. But since multiple contract will get executed, it will average out.
So in the previous 2 quarters, two and this current one, which ended, the margins were like mid-teens because of the nature of the contract as well.
No. Nature of contract all largely same only. Depending on the bid to bid, margin differs.
Okay, but on a steady state, you are guiding 12%, and your aim is always more. That's what you're saying.
More. Yeah.
And that is considering once the wind revenue also kicks in.
Wind will be wind revenue. I'm speaking at a standalone level of Refex industry. Wind will have a different margin.
So what will be your consolidated outlook on the margins going ahead? What can one expect?
As of now, I mean, we are not speaking on the leading number, on the guidance on this thing, but it will have a better margin than the first.
All right, sir. Okay. Thank you so much.
Thank you. We'll take our next question from Rahul Bafna. Please go ahead with your question.
Hello, am I audible?
Yes, please.
Regarding, sir, this whatever this income tax raid and everything has happened, no, it's totally crashed the prices of shares and everything. So we have been an investor from last year, and stock is continuously going down. So what is the next vision for that? At the end of the day, it is business, sir. So as a stakeholder, everyone, we are also invested to earn. Nothing seems, right. Waited for quite a long time and nothing is right. Almost 50% down the stock is. So what is the next vision for the company if we hold, what to do, what not
I
to
think,
do?
Rahul, over the last 1 hour, we have spoken about the guidance business, everything. We really don't have any say on the stock price or comments on the stock price. I think that is market driven. Like you've seen, the business has been growing month on month, quarter on quarter. So the company is doing very well, and it will just continue to do very well going forward also. We don't have any comments on the stock price, please.
Any information regarding when the stock split is happening, so demerger is happening?
No, there is no stock split or the demerger. We've already given the guideline that by end of April it will happen, sir.
Okay, sir. Thank you. Best of luck, sir.
Thank you.
Thank you so much. We have our next question coming in from the line of Aniket Madhwani. Please go ahead.
Yeah, hi. I was just going through the P&L and just realized that there is a significant dip year-on-year basis. I mean, if you compare to the December 2024 number, so there is around 16% drop in top line. So, any specific reason for this?
Aniket, I think we did explain that earlier also. It is because of the discontinuation of power trading business and the refrigerant gas business. That is why there's a dip.
Okay, so you will be expecting you will be expecting to improve in coming quarters, right? Hello.
Our profit will keep improving. I mean, our focus is creating maximum profit in the business. We are realigning the strategy. We have discontinued where margin is less, like power trading, refrigerant gas, which we have spoken. And we are also, our focus is more on growing the service business, which is ash handling and the mining service business. We're not concentrating on more of a coal trading also. We are reducing it. That is the reason revenue drop has happened, where profit has increased from year on. I mean, if you compare, it was EBITDA level, it was 153 crore. And it is now, this 9 months, it is 207 crore.
Done, yeah. Thank you.
Thank you so much. Ladies and gentlemen, that was the last question for today. Hence, we will now close the Q&A session. On behalf of Refex Industries Limited, we conclude today's conference. Thank you for joining us.
Thank you so much. Bye.
You may now click on the leave icon to exit the meeting. Thank you everyone for your participation.